Mm. Did this thing just really do that again? Cool. All right. Cool. All right. Man, I doubt it though, but doubt it. Mm. That damn consistency rule. That damn consistency rule. So I just made $1,500 in both of my funded accounts. I gotta stay consistent, so I had to close it, unfortunately. Um, actually, I made $2,100. Actually, um, yeah, in three of my funded accounts, I took this same trade, and they're all consistent. So I made $2,100 just now, and it's all thanks to my baby Nasdaq. It's all thanks to her, and it's always thanks to her. Always. ES. Mm, I took an unnecessary loss in the ES, and I really can't believe I made $45. Like that's crazy. Mm. Mm. This account might get blown. Apparently, I guess I didn't close a position here in this Apex account, and for whatever reason, I didn't know that Apex did not auto close trades. I did not know that, and to my surprise, they kept the trade open, and the thing just obviously it crashed. I was in long, and I did not know that this thing was in. I didn't know it didn't auto close. That's frustrating. Mhm. So I'm gonna try to bring this account back, but it's gonna probably be it's gone at this point. I really don't even know how much I've lost so far, honestly. Mm. I mean, if this thing doesn't go straight to the targets, this account is probably gone. Alright. Yeah, I probably this account is probably gone. Mm. Oh shit! I almost messed up again, man. All right, make sure that there's actually. Let me just uh, make sure. Making small little mistakes here and there. I have no clue what the heck is even going on. Okay. Mm. And this thing will probably get to this thing will probably get to like 800, 820, maybe 845. Probably the most we get. Mm. Hey, what's up, Court W? What's up? Mm. Mm. I feel like I'm playing with fire here, but I mean, I don't have the best entry, but I'm gonna let it ride. Apparently, my first target is resistance, as always. Mm. Energy is definitely real because I'm feeling it. Definitely not feeling it at all. Should we got Powell testifying in the next what is it, 13 minutes? So we'll see what the market does here. I don't think just because Powell is testifying that we should start selling. The market suggests that we could see it a double top reversal right here. We could, but I don't think we see a full-fledged reversal. I think the market wants to at least get up there to around 840, 830-ish, possibly. At least around 815, 820. At least that. And don't be shy, NQ. Don't be so coy. Take that target, man. Don't be so coy. You know how nasty you are. Take that target. Nice. I mean, if this shit drops, this account is probably gone. I'm probably at my last little bit of drawdown. So, I mean, it's really putting a stop trying to protect this. Either this thing hits my targets or this account is going to be liquidated. So I'm preparing myself for that. I made a mistake if you're just joining. Apparently, I left a limit in this Apex account to go long. Apex didn't auto close it. It went into the new session and I was down like 4K. And I was like, dude, what the fuck? I didn't even notice it last night. Down like 4K in this account because of this big drop. I was in long and this drop. Kind of frustrated about that, but what can you do? What can you do? It's not like I worked hard, building the account or nothing. And just one little small mistake cost me half the drawdown. So that's why I kind of copy traded that this move right here in 3 accounts. And if it wasn't for this consistency rule, honestly, and this is kind of what I was talking about yesterday. If it wasn't for the consistency rule, I still would have been in this position. I still would have been in this trade. I still think there's more room for upside, but I wouldn't have taken profits versus, man, I have to adhere to a consistency rule. So let me take my $700, close out of the position, and be happy. That's why I prefer to have the consistency on the funded side to protect me from myself. All right, so we got 8 minutes before Powell starts testifying. I think to the Senate, I believe, if I'm not mistaken, it's to the Senate. This is something that is done every year. We should see, or we could see some volatility today, but tomorrow is usually just him repeating what he's going to say today. We do have CPI tomorrow, so he could be asked questions concerning CPI. There we go. All right, so we locked in some profits at least. So, okay. All right, now, okay, that gives me some drawdown back. I should be good. I should be good because I was down like 4K. Now I'm only down like 2. So, okay. All right, so that's giving me some drawdown back. And I can't believe that stupid little mistake cost me so much money. 4K without even freaking trying. On 3 contracts, mind you. I think I had I think I was probably in like 4 or 5 contracts. I just had limits set, and I don't know why I did that. And I don't know why Apex don't auto close like everybody else. But they didn't, so okay. So I mean, so we got some targets hit. I mean, that's what I care about right now. Is that we got some drawdown. Now we can kind of see if we can bring this account back. If we get a pullback back down to my point of entry or close to 766 right here, I'm willing to add to the position. I'm willing to add to it if given the opportunity to add. I'm willing to do it. Because if we learned anything yesterday, you can dedicate your hearts, but dedicate your hearts to the charts. Because as long as this thing is adhering to this support trend line, it doesn't matter what your heart thinks. As long as it's adhering to this. All right, we got 5 minutes until Powell speaks. So if I'm a market participant right now, I'm thinking that I should be getting in short. So I'm going to fade that. I think everybody and their mom is short right now. Thinking that Powell's going to cause a drop. So I'm going to fade that. I'm fading that. All right, so I do want to kind of get in close as possible to that. Oh, what day? That's interesting. That's interesting. Shit. Yeah, I was like, oh, we got him. We got him. We got him. We ain't closing out this position. I'm pretty sure he's not even in front of his desk or nothing. He just left those little limits there lingering. And it just so happened that price filled it. So we're gonna let him ride out. And then the crazy thing is they let me carry the damn position to the next session. So shit. I mean, if they're gonna be that nasty, they're gonna be that fucking nasty. Shit, let me carry a winning position to the next session then. Shit. Apex. They don't want me to do that. Shit, I'll get out at the bottom and keep a damn winning position and get out at the damn top. Yeah, I think we go up today. We could see, I mean, if the market continues to go up the way that it's going up now, 22K does not seem out of the ordinary, especially if we can hold certain key levels. If we can hold certain levels, it's definitely gonna. Yeah, I mean, if we can break above, I mean, if we can break above 960, I mean, obviously 22K is literally around the corner. Let's see. What is like 830? Yeah, is 830? Yeah, I think okay. 830 is looking like a level. Yeah, 830 is looking like a level. Probably if we can get above 845, then yeah. 845, then we can that's when I'll believe that the market objective is to get to 22K if we can get above 845 and hold. But if we get back up to 845 and then the bulls pile into this, or not the bulls, the bears pile into this, then obviously we're going lower. 845 is that make or break for both parties. It's make or break. Either they hold or fold. Either they hold it or they fold. That's it. That's the only options. But looking at this price action, we've made a higher low. So I think the bulls will be successful here. Yeah, I think the bulls will be successful. All right. Here comes 9 o'clock. We got less than 60 seconds. If you're not well positioned, if you're not comfortable, this is your opportunity to get out. We're going to see some volatility here. Good afternoon. Good afternoon. Okay, let's see if we can find Powell's testimony. We can probably just have like the sound like in the background or something like that. Yeah, here it is. Damn, look at that. Damn. Up. That was definitely a sweep of liquidity there. I'm jumping in. If it lets me. I'm jumping in. I'm jumping in. No, it's not fair. No, 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 no. What the hell? All right. Dude, stop it. Stop it. Stop it. Stop it. Stop being nasty to me. All right. So I'm getting out of that because my targets and my stops went away. So I'm gonna lock that in. All right. So I brought my account back down to only a minus 1,000. So stick it, Apex. You thought you had me? No, you didn't. I brought it back. I was down 4K. Now I'm only down 900. You thought you had me, but you didn't. All right, so let's see. Let's see. Powell, we do not need to hurry to adjust policy. You don't need the.
The Federal Reserve serves a critical role in the function of our government and the global economy. You have the ability to influence markets and directly impact the financial future of hundreds of millions of Americans. That is why the Federal Reserve is supposed to be an independent institution free from politics. But in recent reality, the Fed has been susceptible to political pressure. Take, for example, the Fed's involvement in the network for greening the financial system. a group dedicated to green financing and climate change, which the Fed joined in December 2020 as President Biden was about to assume office. Just last month, the Fed announced that it had pulled out of the organization as President Trump was getting ready to be sworn in. To the American people, this is flip-flopping in the political wind. Too much focus on climate change instead of supervision is consequential. And in March, just 2 years ago, we saw the failure of Silicon Valley Bank. SVB marked the third largest bank failure in U.S. history and the largest since the 2008 financial crisis. And yet not a single federal regulator was held to account. In fact, the FDIC filed a lawsuit against bank executives, which accused the SVB of egregious mismanagement. And I agree. How is it that no bank supervisor has faced any consequences? With 30 MRAs and MRIAs that never had timely action at SVB, how can the people who are supposed to be our cops on the beat have not faced any recourse for such egregious failures? I simply don't understand. We must all address the fact that over the last 4 years, the Biden administration and Bidenomics have devastated, decimated, and destroyed hardworking families' ability to support themselves. During Joe Biden's time in office, overall prices rose by over 20%. Energy prices, 34%. Transportation costs, 31%. Groceries, 22%. But that's not all. Thanks to Bidenomics, 2/3 of Americans have less than $1,000 in their savings accounts. But there is good news.
I mean, you really don't
Things are
want
going
money
to
in
get
your
better.
savings account.
During his first term,
You don't even get
President
paid
Trump
for your
kept
money
his
sitting in
promises
there.
to the
So
American people.
that's not
In
necessarily
the
a bad
first
thing.
3 years of his presidency,
You don't want money in
President
your
Trump
savings
built
account.
the most inclusive economy
I have a savings
ever.
account. I
7
don't even
million
use it. They
jobs created,
forcefully give
and
it to you, but
2/3 went to
you're
women,
not going to pay me
African Americans, and Hispanics. It's time
no
to once
money just to
again
keep my
make
money sitting
America's
when I can
economy
just have
work
it doing something
for the
else.
folks working paycheck to paycheck.
So
Joe
that's not a bad
Biden
thing.
broke our economy, and Donald Trump will fix it. For too long, bank regulators have followed a black box regulatory framework with little to no recourse. The FDIC, under President Trump's leadership, recently released never-before-seen supervisory documents which confirmed that Biden's Operation Choke Point 2.0 was real, despite assurances
Yeah, they
that
definitely
these
are.
unacceptable practices would end following the Democrats' first Operation Choke Point 1.0. We are seeing an unfair playing field that results in disastrous consequences for legal businesses and law-abiding citizens. On one hand, if you were in the private sector and you do your job poorly, you would face consequences, reprimands, suspensions, or even being fired. But if you are within the walls of the federal government, such as a bank regulator, you will face no consequences for your actions, even if you pressure a bank to cut off services to digital asset firms, political figures, and conservative-aligned businesses and individuals. To me, that goes against the principles of fairness and market access.
All right, so let's try to make a rotation down
Over
lower.
the last 2 years, as the ranking member of this committee, I have consistently argued that Basel III endgame proposal will raise costs and limit credit access for hardworking Americans. And while I'm glad this proposal was not finalized, the uncertainty surrounding Basel III forced banks to put capital on the sidelines, limiting access to that capital for local small businesses across our country. Now, as chairman, I plan to work to rectify the issues of the Biden administration. Chairman Powell, I look forward to hearing from you on the Federal Reserve's future.
Don't say good afternoon.
And the plans that you have for right-sizing
Or don't say good morning.
financial regulatory framework, specifically around Basel III. To create jobs here in America, we need to make sure there's capital and liquidity in the market. And we also want all Americans, even those growing up in poverty like I did, to know that they can access the capital necessary to start new businesses, grow existing businesses, buy a home, and pursue their American dream. Chairman, I look forward to your comments and your testimony. I will simply say that I believe that weaponizing an independent agency like the Fed for liberal positions, from debanking crypto, bank stress test, and the green financing scheme, is not calling balls and strikes as a fair referee. And I hope that we are getting ready to clean that slate.
All right, Mr. Scott.
Start
All right, come
afresh
on, bro.
and focus on a healthy economy. Ranking Member Warren.
Thank you, Mr. Chairman. Chair Powell, it is no secret that you and I disagree on the need for strong bank regulation, on monetary policy, and on the Fed's stock trading scandals. We have sharp differences, but I believe you are a principled public servant who cares about this country. We are at an unprecedented moment. Our financial systems are facing huge risks from the economic chaos of President Trump and his co-president, Elon Musk.
Oh my God, I can't believe she said that shit,
On-again,
dude.
tariffs
That's
to
crazy.
on-again, off-again layoffs for tens of thousands of government workers, to on-again, off-again cuts in domestic grain purchases, to on-again, off-again support for medical research.
All right, well.
Now, co-president Musk and his OMB director have frozen all work at the Consumer Financial Protection Bureau. There are now 0 cops overseeing the $18 trillion consumer lending market. 0 cops. Investigations into illegal foreclosures and auto repossessions canceled. Exams of giant credit card issuers to weed out unlawful junk fees canceled. Probes of illegal debt collection practices canceled. Rules to save people billions of dollars canceled. If Musk and his OMB director succeed in killing the CFPB, it's like putting a sign on every checking account, every credit card, every mortgage application, and every car loan. Cops have been fired. Let the scams begin. That is not all. Musk and his Doge crew are also rooting through the Treasury's most important payment systems.
Oh my God, bitch! What are you talking about? We're talking about Powell here. You talking about Elon?
Payments go
Come on,
through,
man.
from Social Security checks to grants for community health centers. No one has verified how they got this access or what they are doing with it. No one has checked whether
she's just saying all that
Americans'
shit
financial
because
data has
her
been
friends just text her
copied
on
or
inputs.
sold
Just start
for the
saying some
personal
stupid shit that don't matter.
profit of Mr. Musk. Instead, we've had a series of misleading and conflicting statements by Treasury Secretary Bessent. After receiving public blowback, it appears that Secretary Bessent is now trying to throw the Federal Reserve under the bus.
Man, come on,
Secretary
come
Bessent
on.
claims that
Thank you.
Doge
Come on,
can't
baby.
meddle with the
Come on.
Treasury's
Don't
payment
do me like
systems
that.
because ultimately
Don't do me
the
like that.
Fed is in control. Now, I'm not sure whether Secretary Bessent doesn't understand how the system works or if he's just trying to shift the blame to you. But I know he is wrong. The Fed simply executes the transactions that Treasury instructs. If Elon and his hackers, for example, initiate instructions to choke off payments to their enemies, or if they issue instructions to shut down payment for teachers' aides for kids with special needs, the Fed may have no way of knowing that the instructions were manipulated, and the Fed may have no legal method to override them. Chair Powell, the next 18 months may define
That's crazy. You know what she just said? She just implied that the federal government has power, or not the federal government, the Fed has influence in the federal government. And then in the beginning of the meeting, they said that they don't have any ties to the federal government. So which one is it? She's just spreading propaganda. That's all she's doing right now.
The CFPB. Unlike the Treasury payment instructions, you can see if the CFPB's funding requests have been manipulated. I understand that some extremists have a different view about what the law ought to be, but under the law right now, impoundment is clearly illegal. Do not make the Federal Reserve an accomplice to this illegal act and forever sully the reputation of the Fed. Keep the CFPB funded exactly as the law requires. We are in the middle of a crisis as Elon Musk tries to take over our government. But let's also talk for just a minute about your day-to-day job, meeting the Fed's dual mandate of promoting maximum employment and stable prices. It's now clear that the Fed acted too late and let inflation get too high, and then responded by keeping rates too high for too long. These policies made the big drivers of inflation, like housing costs, even worse. And they put Americans' jobs at risk, making it more difficult for them to afford a home and for small businesses to be able to finance their operations. I urge you to move more rapidly to bring down interest rates, beginning with a meaningful rate cut next month. You have proven you can move quickly when it is politically expedient. After President Trump was elected, within the space of just a few weeks, you scrubbed seemingly all mention of diversity and inclusion from the Fed's website. You withdrew from an international central bank group that shares
I think he
information
had to.
on
It's a law now.
climate-related risks to the financial system. You instituted a hiring freeze that will limit the number of cops on the Wall Street beat, and you announced plans to gut big bank stress tests. I can see the immediate political appeal of your strategy, but ultimately it will fail. You will lose good people. Climate catastrophes will continue to mount, and the increasing vulnerability of big banks will threaten our entire economy. Sure, Donald Trump may be happier with you right now, but wading deeper into politics to please him over the long run will burn the reputation and the independence of the Fed and put our entire economy at risk. I urge you, don't fall into these traps.
Well, if he
Thank
wants
you,
to get
Mr. Chairman.
reappointed, he does.
Yes, ma'am. Today we'll hear from Chair of the Federal Reserve,
Because
Jerome
either
Powell,
he
on the
does it,
semi-annual
either he
monetary
wants to
policy report to
maintain
Congress.
his powerful
Chair Powell, thank you
position,
for your
or
testimony
Trump is
today,
going to
and you
appoint
are now
someone
recognized.
that will. His
Chairman Scott,
reappointment, I believe,
Ranking
is
Member
in
Warren, and other
next
members
year.
of the committee, I
So
appreciate
if
the
he wants
opportunity
to
present the
continue
Federal
as the Fed
Reserve's
chair,
semi-annual
he better
monetary
start
policy
kissing that
report.
ring, or
The Federal
somebody
Reserve
else
remains
will.
squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals
Now, with the
over the
Fed,
past 2 years.
if he were to lose his
Labor
position
market
as the
conditions
Fed
have
chair, he
cooled
would
from
still
their
remain on the
formerly
board. He
overheated
just wouldn't
state
be the
and
Fed
remain
chair.
solid.
So
Inflation has moved
I'm
much
thinking
closer
that
to our 2%
we
longer-run
probably
goal,
will see a
though
shift
it remains
from
somewhat
Powell
elevated.
as his
But we
term
are attentive to the
gets
risks
closer to
on
its
both
end,
sides of our mandate.
and he's going
I
to
will
need
review
Trump
the
to
current
reappoint
economic
him.
situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth
All right,
quarter,
Apex,
but
you
was
thought you
solid for
won.
the year overall.
You didn't win. I brought this shit
Following
back.
weakness
You
in
ain't
the
win.
middle of last year, activity in the
Trying to
housing
set me
sector
up,
seems to have stabilized.
bastards.
In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady now since the middle of last year, and at 4%
All
in
right.
January
Okay.
remains
I brought
low.
this account back.
Nominal wage
I brought
growth
it
has
back.
eased over the
Apex
past
thought they
year, and the
won.
jobs to workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups.
Yeah, he has to, Alfred.
Inflation has eased significantly over
He
the
has to
past
be
2 years,
scripted.
but
He has
remains
to
somewhat
speak
elevated
like that
relative to
because
our
he has so much
2%
influence over the
longer-term goal.
markets. If he says
PCE
something,
inflation
makes a
prices,
mistake,
PCE prices rose
uh,
2.6%
and if
over
he
the
leaves
12
his
months ending in
words to
December,
be
and
interpreted,
excluding the volatile
we
food
can
and
see
energy
big
categories,
moves back and
core
forth.
PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a
So he
broad
has to speak
range
that
of
way.
surveys of households, businesses, and forecasters, as well as measures from financial markets.
Yeah, I know. I
Our
know that you
monetary
know, but
policy actions are
just for
guided by our
everybody
dual
else
mandate to
that may not
promote
know.
maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of the progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and
All right.
employment. In
Let's
considering
get
the
that
extent
push,
and
baby.
timing of
Let's get
additional
that push.
adjustments to the
Get that
target range
push.
for the
Let's get
federal
it.
funds
Let's
rate,
get it. Let's
the
get it. Let's
FOMC
get it.
will
Let's get
assess
it. Let's get
incoming
it.
data, the evolving outlook,
Yeah, we
and the
should, man,
balance
dude.
of
We should
risks.
get to like, man.
As the economy evolves,
I think
we
I'm
will
gonna.
adjust our
I
policy
think I'll be
stance in a
shorting,
manner that
cheating
best
myself,
promotes
man. This
our
thing's about to
maximum
run,
employment
dude.
and price stability goals.
Things gonna run.
If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the
I mean,
labor
we could
market were to
see, you know,
weaken
rejection here, but I
unexpectedly,
think this
or
thing gonna
inflation
run.
were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and
Shit,
policy is
I had to
well
come back
positioned
and
to
make
deal with the
5K
risks
just to
and
bring this thing back
uncertainties
to
that we
break even.
face. This year, we are conducting the second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's Statement on Longer Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy, and on the committee's policy communication tools. The committee's 2% longer run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Chairman Powell. Certainly your words and your actions have a global impact. You have the opportunity and responsibility of leading this country in the right direction economically, and I thank you for your commitment to having a conversation with all of us about how you do that well. You and I had a conversation yesterday. Some of it was frustrating, some of it was illuminating, but in the end, my goal is to make sure that the American people, and specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you
Yeah, I
commit to
definitely
working with
agree
this
with that
committee
middle
to
mine. I
end
think we're going like to
debanking,
22K,
including working with the new
and
vice
probably
chair of
CPI
supervision
tomorrow
once appointed to
is going to
revise the
really dictate
Federal
the
Reserve
direction for
supervision
the rest of the
manuals
week,
to remove reputational
potentially.
risk as a tool to weigh in on political topics.
Yeah,
I'm
Alfred,
happy
it,
to
it
make
definitely
that
could
commitment.
be.
Thank
It
you, sir.
definitely could be. Like I said last night,
Accountability
he's
is
going to
very
say the
important.
same thing
I
that he
would like to
says today,
think accountability is a
but
priority
I
for
think the only
everyone, especially the
thing
Fed,
new
given that
would
failures in Fed
be his
supervision
thoughts
can result in
on
the loss
the
of
CPI
billions
release,
of
what it would
dollars.
mean
Yet following the failure of
for
the
future
Silicon
rate
Valley Bank,
cuts.
which was in
If
part due to
inflation
the
is
failures of its
accelerating, what does that
regulators
mean?
to
If
identify
inflation's
egregious
accelerating,
mismanagement of interest rate and
I
liquidity
mean,
risks, we have yet to see any regulators be held accountable. And
do
as
they
you
cut rates?
recall, that
I mean, they would
was
raise
one of
rates,
my
right?
frustration
But
as a guy who spent a lot of time in the private sector, 15 years running a few businesses. I can tell you that
but he'll probably just get asked
accountability
questions
is a
about
necessary
CPI
part
and how
of
it will
making
affect
the
his
entire
decisions
organization
to cut rates in the
healthier
future, and
and
that'll
perform its
probably
job
move the
as well as
markets.
possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee failure. Please explain to me why Fed employees
Hit
are
that
held to a different
target.
standard from
There
my
we
perspective than
go.
everyone else.
Yeah,
And what are you planning
Apex.
to do to
They
take
punching the air right
accountability
now.
for
He
Fed
was like, I thought
failures
we
in
had him.
supervision?
I thought we had him.
So we've
I
actually
thought
done
we
quite
had
a
him.
lot
How was he down
in
4 or
response to the
5K?
events
Now he's up
associated with
2.
Silicon Valley
I thought
Bank.
we had him.
So we've done many,
Nah,
many
you ain't
things.
got me.
In terms of specific
You ain't got
accountability,
me.
what we found was this
So I'm
was
gonna bring.
not a case of
I
malfeasance or
really like, dude.
nonfeasance
I'm
so
really
much.
happy that
It
I
was a
brought this
case
account
of
back because
people were
I was gonna be very angry.
carrying out a specific
I was
playbook
angry
that
this morning
failed to
because
cause
I
us to
made
act
such
in
a
time
simple
for these
mistake,
things. So it wasn't
but I was able to
actually
bring this account back.
particularly fair to the employees to say you violated
Man,
our
hit that target,
practices
girl.
in
Damn.
some way. That
Stop
wasn't
playing
really
with
what
me.
happened. What happened was, I
Damn.
would say, a lot of focus
Damn.
on process and on governance and controls, and not enough focus on
All right, man. I'm gonna take
bread
this,
and
and
butter
I'm just gonna let
banking,
this one
credit risk,
contract run.
liquidity risk, interest
I'm
rate
not going
risk,
to
things
push my
like that.
luck.
So,
I'm not
as we
pushing my luck.
discussed yesterday, we
I'm just
took
gonna let
very
that one
substantial
contract
steps
run.
to avoid further spread of those issues, and that was successful. But I understand your point on accountability.
This is one of the areas where you see the approach to
Yeah,
looking
and
at
this is
safety
kind of
and
why.
soundness
So I'm
and
looking
the
at my
number of
commissions.
MRAs and
Even though
MRAs
I
that
took
when
multiple
really
trades, my commissions are not that bad. But
documented,
if I
but
was
no
doing this
action
in
was taken,
micros,
that leads
like the
me
last
to
time I
the
did it,
conclusion
I
that
had like $600-700 in commissions.
employees, supervisors should have been held accountable for that. I'll move on though. In the past, you've supported tailoring regulations so that we ensure banks of different sizes thrive and to preserve our diverse banking system. Will you commit to working with me as chairman to make sure that financial regulations do not impose more burden than is necessary? I'll say that this comes after a number of conversations with community banks and regional banks that have continued to stress that the cost of the regulatory framework around them isn't just harsh, it's oppressive. Larger banks suggest that the cost per employee for the regulatory framework is $10,000 per employee. I think we can do better and would love to hear your thoughts on that.
Right. First of all, I will commit to working with you on that. We do try to.
I think we got a hidden channel right here, guys.
I think it's fair to take a fresh look.
I think we got a second.
Debanking.
The market just made a second trend line right
both
here.
In your hearing and in the one on the House side, we hear a lot of people talking about that.
We got, and now we're trading in this little
we don't
triangle
intentionally
channel.
Do these things, but sometimes regulation leads things to happen, and we need to be working on that.
I appreciate that, and I'll turn over to the ranking member. I'll say this after having
I think we go to 22K. I'm pretty sure that's where we're going.
That was
Why not?
made clear to me with specific statement from
I think so too.
That
I think so too.
Regulatory OCC and other regulatory agencies.
Those big news events. I feel that
certain industries.
They're just meant to rebalance the markets. If the market is going in one direction for too long, it's just an excuse for the big players to get out of their position and reposition.
Thank you, Mr. Chairman. So over the weekend, Co-President Musk and Acting Director effectively shut down the CFPB.
Co-President
No more
Musk.
cop on the beat looking out for a family of 4 in South Carolina facing an illegal foreclosure. No more cop on the beat looking out for your grandma whose bank account has just been taken over by a scammer. No more cop on the beat looking out for people getting ripped off by giant credit card companies that are charging illegal junk fees. It also means that the CFPB is no longer doing one of its most important jobs, examining big banks to root out illegal conduct before it happens, or at least stop it before more people get hurt. Chair Powell, if the CFPB isn't on the job right now, then who is administering JP Morgan or Wells Fargo's consumer compliance exams to ensure that they are following the law?
Senator, I believe that, and you would know, that Dodd-Frank moved all authority for examinations in the consumer space to the CFPB. We still have some jurisdiction.
We'll talk about that in a sec. But the answer to my question, please. If the CFPB is not there examining these giant banks to make sure they are following the laws on not cheating consumers, who is doing that job?
I can say no other federal regulator.
No one, in other words. So thanks to co-president Musk and CFPB acting director vote, Wall Street banks no longer have to show the bank
And this is
examiners
why
that they're not
it's just people like
illegally
this.
opening accounts
Now,
people didn't ask
diversity,
for, like
equity,
happened
and
with Wells
inclusion.
Fargo,
The
or
idea
charging
behind it
illegal junk fees
is
like the
noble.
Bank of America
It's just
did.
people like this
But
that just gives it a
CFPB has
bad look.
jurisdiction only on banks
I mean,
that
she's
have more than
using
$10 billion
terminology
in
and language
assets.
that would suggest
So what's
that,
happening in
I mean, we
thousands
all know
of
that there's a
community
shadow
banks
government,
all around
but
the
she's
country,
openly saying
those
it.
that have
But
less than
there was a
$10
time that
billion
if someone
in
were to openly talk
in
about a shadow
assets.
government,
So
they would
Chair
be
Powell,
considered
as you
conspiracy
know, the
theorists.
Fed
And here she is
oversees
on
consumer
Senate
compliance
openly
for
speaking about stuff
state
like that.
member
So it's like,
banks that have less than $10 billion
that's just very
in
interesting
assets.
for someone in Senate
Has
to be
the
speaking
Fed
like that
suspended
on a
consumer
public forum, on a
compliance
public
exams
stage,
for
on a
those
national
smaller
stage.
banks? Or is the Fed still on the job to make sure that those smaller banks are following consumer financial laws?
Still on the job, business as usual.
All right. By forcing the CFPB not to do its job, President Trump, Elon Musk, and the author of Project 2025, Russ Vought, are giving Wall Street banks an unlimited get-out-of-jail-free card so they can cheat working families, even while community banks continue to play by the rules. You know, for any Americans who have money deposited at JP Morgan or Wells Fargo or any other of the giant banks, they should now know that there is no one on the job to make sure that those banks are not scamming you. Only the smaller banks now have a cop on the beat to make sure that they aren't cheating consumers. You know, if I had
All
my
right, so
money
we're up
in one
2K.
of those giant banks, I might think about
I'm
going
gonna
to a
take this
smaller bank
off.
where the
I'm gonna take
protection,
that
at
win
least
for
right
today.
now, is a whole lot
I'm gonna take
better.
that. I'm gonna go on this.
Now, at the same time that the
Let me
CFPB
actually
is
make
under
sure that
attack,
all. I'm
the
gonna just
Fed is
cancel
buckling
everything.
to
Make sure that
pressure
there's
from
no
Wall Street to
lingering
erase
orders.
other safeguards
I'll
for the
take
too
that.
big to fail banks. During the first Trump administration, under your leadership, the Fed weakened the big bank stress tests,
Hop
including
on the beat.
by giving the big banks some of the answers to the test in advance.
And this is the
I
same
called you
people.
out on it.
First, they
But
want to say,
you
"Oh, where's the
promised
cops
right
at?"
here
But then
in
they
this
want to
committee
defund the
that
police.
you
They
would
want to
not
defund
give
law
those
enforcement.
banks the
They
whole answer key.
villainize
I'm going to quote you
cops
back. You
because there's a
said,
few bad apples in the
complete
bunch.
knowledge of the models could lead to a model monoculture in
It's
which
just
all
these
firms
people are
have
they're
similar
just
internal
shameless,
stress
in my
testing
opinion.
models, which
They
could
just say
increase
whatever
the
they need
correlation
to
of risk in the
gaslight the
system
people that are
and
listening so they
miss
can get
key
what they want.
idiosyncratic risks faced by the firms. I agreed with you. But several weeks ago, the Fed announced that it has plans to do exactly that. Hand all of the
Yeah, I
answers
appreciate that
over
night
to the
part. Yeah.
giant banks. Chair Powell, why is the Fed about to
Not
propose
gonna
a
lie, that
rule
really
that
it was a really
directly
bad start of
contradicts
my
your
day,
own
but I was able to
testimony
overcome it
and in your
by
own
staying
words
focused.
would render the stress tests toothless?
Senator, in
Yeah, I know,
essence,
right?
because the ground has shifted very substantially
Cop
in
on the beat.
administrative law, and
You just
we
imagine
actually
a cop
want
swinging
the
his
stress tests to
nightstick,
remain
walking the
resilient to
beat.
that. And so we're making
What?
changes to accomplish that.
Well, the changes are changes you've
Oh
identified
man, these
earlier
people
as making those
shameless.
tests toothless. Look, the big banks are going to juice shareholder payouts and leave this economy more vulnerable to a crash. The Fed is knuckling under to bank lobbyists. We
I
know
wish
how
they were
this
this
ends.
aggressive when
People
Biden
will
and
suffer.
Harris was doing
Wall
the
Street
exact
will
same thing
get
that they're
bailed
talking
out.
about.
I
I wish they
urge
were
you,
this
Chair
aggressive
Powell,
instead
to
of
serve
gaslighting
Main
America
Street
and saying,
instead
hey,
of
even
Wall
though
Street.
when you
Don't
go to the
weaken these rules.
grocery store and eggs is $10 million,
Thank
hey,
you.
we're still in a
Senator
great
Rounds.
economy.
Thank you, Mr.
We know
Chairman.
that you need 10
And
jobs
Mr.
just to
Chairman,
buy
thank you
a
for coming
gallon of
before the
milk, but
committee. I
hey,
appreciate the
the
opportunity
economy
to
is
visit
still
with you.
great.
I've got
But
a series of questions, but
all
I
of a sudden now,
would like to give you
oh,
an
now
opportunity,
the
if
economy
you
is
would
this and
like.
that. Like, my
The
God.
suggestion that the ranking member has made here is that the big banks
But
can now scam individuals right now. Any change in the laws regarding how they're supposed to be treating the individual consumers out there or anything along that line?
Law changes? No, I'm not aware of any
Any
law
changes,
changes.
any rules that they would have to follow?
Not that I'm aware of.
Are they still audited, and do they still have the regulators in watching all of their businesses just as they did before?
Well, they'd have all the regulators except for the CFPB.
Very
if,
good.
If in fact, in the hypothetical, the CFPB weren't carrying that out.
Anything else you'd like to add before we move on?
No, I'm good. Thank you.
Thank you, Mr. Chairman. As we continue to prioritize the stability and the resilience of our financial system, the ongoing Basel III rulemaking process has remained front and center in shaping our regulatory framework. I guess I was rather outspoken with my opposition to the original proposal, and further work was stalled at the end of the last year. I guess my question for you today, sir, is could you provide an update on the Federal Reserve's progress in finalizing the Basel III Endgame rulemaking process?
I'd be glad to. So we remain committed to completing Basel III Endgame. We think it's good for U.S. banks. It's good for our economy that there be a global standard beneath which foreign banks can't fall. And that was one of the big ideas behind the whole Basel Committee approach. So where it sits now is we await leadership arriving at the OCC and the FDIC, and that seems to be happening. And when that happens, we're going to sit down with them and work our way through to a Basel III Endgame proposal. And I think we can do this reasonably quickly, one that is compliant, consistent with the Basel requirements, and also consistent with what other large jurisdictions are doing. I'm optimistic that we can do that fairly quickly, and we're committed to doing that.
We always wanted our banks to be competitive with European banks. And I'm just curious, the original proposal that was in front of you, and I'd like your thoughts on this, it was estimated to increase our bank's capital by 19%, which I think may very well have created a potential disadvantage within the U.S. institutions versus our European counterparts. With any new proposal, what's your thoughts? Would you make a commitment that this would be a neutral approach with regard to capital?
The main commitment I'll make is we'll work together with new leadership at the other banking agencies to do something. But that's certainly, you know, I've said many times in this committee that I think that the level of capital in the largest banks is about right, and so it'll shake out somewhere in that area, I would guess.
Our expectation would be, and the markets would expect, that it would be neutral with regard to capital.
In that range, but I want to defer to our new colleagues and get their views as well. But that's a good starting place.
Okay, thank you. The Federal Reserve's partnership with the U.S. Treasury plays a central role in supporting our nation's payment infrastructure, which processes a vast range of daily transactions, from federal benefit disbursements to debt obligations. Could you outline the Federal Reserve's role in supporting and managing the Treasury's payment systems, including how the Fed works to keep these systems secure, efficient, and capable of handling the government's high volume of daily transactions?
So it's a complicated set of arrangements, and I'll try to summarize quickly. Effectively, Congress authorized spending, and then the agencies carry out those spending orders. And when the way they do that is
either
they
we
send an
blast
order to
up or
pay a payee
we're taking this
recipient
low out.
to the Treasury Department.
You know,
Upstream,
I
before
think
it
we
gets
take
to the,
this
to the
low
Fed,
out.
all of these
I think
decisions are made
actually,
about, is
you know
this
what? I
an
think we take
appropriate
that
order?
low out,
Does
man. I think we do.
Is this
Looking
payee
at the
on the
chart, I
don't
think we
pay
take it
list and
out.
all those things? Once all of that is set, it comes to the Fed, and by that I mean 4 or so of the reserve banks, and we actually make the payment. We take the money out of the Treasury General account and we make the payment. We make no judgments whatsoever. Those are all made upstream from us, and we are in fact the fiscal agent of the Treasury.
Confirm for me today, is the system safe today?
I believe it is, and I will tell you, we are very strongly committed to the integrity, efficacy, resilience, and all those things of this system. And people do depend on this in a big way, and we're committed to that.
One last question for you, sir. The failure of Silicon Valley Bank, and the chairman brought this up. I'm just curious, recognizing a lot of banks out there looked at this, it cost the other banks in the system a lot of money to pick up the costs involved in the losses. Nobody's been fired, but you did indicate that it was a failure in the playbook. Has the playbook been revised, or can we expect that it will be revised?
In a lot of ways, it's been revised. Yes, I can go into some details. I mean, we're one thing that didn't happen was, for example, the supervisors didn't follow through aggressively enough on things that they'd said. If they'd done that could well have been enough to stop it. But a lot of it was just not focusing enough directly on what was a very large amount of interest rate risk, a large portfolio of long-term securities matched up with an unstable funding base. And somehow people wrote about that, and not the Fed, but others wrote publicly about this, but somehow we don't expect bank runs outside of a crisis in this country. And that's what that was. It was a bank run, and bank runs are incredibly damaging. I think everyone learned a lot from that and is determined to do better.
Thank you, Mr. Chairman. I think this is one that I think, as you appropriately pointed out, I think this is an area where a lot more questions are out there yet. And I think if it's the playbook that was the problem, I think perhaps a discussion about how that playbook has been revised would be appropriate in the future. Thank you, Mr. Chairman.
Thank you. Senator Cortez Masto.
Chairman Powell, thank you. And thank you always for the conversations in between these hearings as well. Let me focus on a couple of things of concern. And you touched on a little bit of this, and I think this is important to clarify. There was a change in the law when the CFPB was created. The CFPB examines the banks and enforces the law, whereas the Fed only supervises those banks. Is that correct? Or how would you determine that relationship?
With the CFPB? So Dodd-Frank took a lot of the consumer compliance jurisdiction away from the other banking agencies and gave it to a newly created agency, the CFPB. We retained a residual amount of that, as we just discussed, which was banks under 10 billion in assets. But the CFPB essentially took all of that when Dodd-Frank came into being.
So as it was created, when you two were working together, the Federal Reserve collaborated with the Consumer Bureau when supervising those large banks, correct?
Yes, we still retain supervision over all the holding companies and also of Fed member banks.
And let me ask you this then, does the Federal Reserve enforce consumer protection laws now for things like money transmitters?
Not for money.
That would be the consumer protection. That would be CFPB.
Yes, yes.
Okay.
That's
And
right.
so when we're talking about collaborating with the CFPB for financial technology firms, what would the Fed Reserve now do that if the CFPB, if the hypothetical is the CFPB no longer exists, what would be the Fed's role right now with respect to technology firms?
We don't have jurisdiction over, we have jurisdiction over banks and some financial market utilities.
So let me ask you this, because I know there's a number of Nevadans who file consumer reports of concerns about fraud and predators with the CFPB. The Fed Reserve doesn't receive those reports, correct?
No, I don't believe so.
And you have no role when it comes to consumer protection like the CFPB does, correct?
Unless you're a Fed member bank that has 10 billion or less in assets, then we have jurisdiction.
Right.
On a
So there
consumer.
is a gap. If the hypothetical is true, and what we're hearing that the CFPB is being shut down, there is a gap, what we're hearing in enforcement out there, and particularly when it comes to consumer protection. Is that, would you say that's true?
Yes, for all banks that we don't
Yeah.
supervise.
And I think
Yeah, I
that's the
definitely
concern
agree with
we're all
that,
having
Middleman.
right now, is this concern of when we're looking to streamline government. And
Self-preservation.
listen, I'll be the first to tell you, there's a
At
lot
its
of bloat. We
finest.
need to streamline it.
Just
We
blame
need to
shifting
address
at its
regulations and
finest.
overreach.
Its
But there's a
finest.
strategic way to do it, and not this
Let's
burn
blame
down the
Elon
house
Musk.
that is
Let's
going
blame
to
Trump, who
harm
hasn't even
people
been in
across the country,
office
including in my state. Those
for
Nevadans
3
that are
months. Let's
looking
blame all the
for some
problems on
sort
them.
of enforcement around consumer protection law. So that's what you're hearing from many of us on our side of the aisle here.
Can I just very briefly add that we do have have some residual enforcement authorities, but what we don't have is examination authority. And for the banks that the CFPB supervises.
Thank you. Let me ask you this, and we talked about this over the phone, and I understand it may be difficult to answer this, but the Federal Reserve Board members have been clear that future interest rate cuts are unlikely to happen despite the strong economy. But there are folks in my home that are in my state that are waiting to buy a home. And we know that's still an issue, the high prices right now for home affordability. You add the interest rates to it, it is a problem. So do you think it's most likely that interest rates will remain above 6% for this year, or can you even address that?
So overall, the economy is strong, growing 2.5% last year. The labor market is also very solid. Unemployment at 4%, of quite a low level. Inflation last year was 2.6% for the year. So we're in a pretty good place with this economy. We want to make more progress on inflation, and we think our policy rate is in a good place, and we don't see any reason to be in a hurry to reduce it further. As it relates to housing, so it's true that mortgage rates have remained high, but that's not so directly related to the Fed's rate. It's really related more to long-term bond rates, particularly the Treasury, the 10-year Treasury, 30-year Treasury, for example. And those are high for reasons not particularly closely related to Fed policy. They may remain high. I think, once we lower rates and kind of rates return to a lower level, mortgage rates will come down.
That shit goes up.
I don't know when
I'll
that'll
split the
happen.
baby on that one.
And even when it does happen, we're still going to have a housing shortage in many places.
Thank you. Chairman Powell, thank you again for being here.
Thank you, ma'am. Next will be Senator Kennedy.
That's definitely going to
Thank
stop
you,
run
Mr.
above
Chairman.
that. That
Thank
definitely
you,
is going
Mr.
to
Chairman,
run.
for being here.
It's definitely going to run.
My friend, our ranking member, said that you are knuckling under to the big bank lobbyists. Is that true?
No.
It seems to me that
Did y'all see that?
Big picture should
Did y'all
not
see that?
go
Let me see if I can
unnoticed.
do it.
It seems to me that the big picture should not go unnoticed. Do you recall a year or two ago when inflation was raging? Economists in history said that you were going to have to high unemployment.
Okay.
And
what I was trying to find was, let me just try it one more time. Because I think that was very important. He asked him a question, and his body language kind of told on him.
Inflation was a year or two unnoticed. Big picture. It seems to me that the
No.
to the big bank lobbyists. Is that true?
No.
You see that? You saw his body language? Huh. Our boy Powell might be. That's interesting.
Perfect. Inflation's
That's an
obviously
interesting
still
body movement that he did
and
there.
long rates
He kind of
are too
told on
high,
himself a
which
little bit.
I want to talk about in a second.
He said no, but his body said
But
yeah.
The fact is,
Or his body
knock
said
on
maybe.
wood,
All
we
right.
have experienced a soft landing, haven't we?
So we got that push.
Not for me
That's
to
what I was
say,
kind of waiting
really.
for. I was kind of waiting for
I'll
that
let
little
others-
breakout.
experienced
If we
a
get a
hard
pullback,
landing?
I'm adding
No,
to
we
this.
sure
Are we in a recession?
No, we're not.
I call that a soft landing. And it seems to me that you and some of the ladies and gentlemen who are your colleagues at the Federal Reserve behind you deserve some credit for that.
Thank you.
I don't know why you.
You know, it's interesting they didn't
Don't
pan
take
the
the
camera
credit.
back to him when he was asked,
Everybody
"Are we
else
in a
in
recession?"
Washington,
They
D.C.
didn't
does.
show that body language.
Again, I'm not saying things are perfect, but I never imagined that our landing could be this soft, albeit not perfect. And I wanted to thank you and your colleagues for that effort. You sure didn't get any help from Congress and on the and our president on the fiscal side. I don't expect you to comment on that. You and the Federal Reserve can to a large extent control short rates, can't you?
Yes.
Through the Open Market Committee. You can't control
You
long
know
rates,
that we
though,
can
can
see
you?
you?
No, we can't.
Why is that?
So a lot of things go into long rates, and one of them is the expected future short rate of Fed policy, but many, many other things go in. Expectations of inflation in the longer run, the
Man, I should
sort
have
of
taken this
risks
trade in my
around
Apex account.
around
Shit.
the economy and around the budget
But
deficit
nah,
go
I'm
into
done in that
something called
account.
the
I'm not
term
jumping back
premium,
into
which
it.
is the part we can't explain
Did a
when
whole
we do
lot of
these
trading to bring that
decompositions.
account back on.
And
I
so,
don't feel like
you know,
dealing
it's
with
set
it.
by supply and demand in the bond market at the long end, and we're not particularly. We have some influence, but mostly not.
Many Americans are looking at short rates and looking at the Fed's behavior and how you reduce inflation, but they don't seem they don't see the long rates going down, and obviously that affects mortgage rates.
But he's
And
right to
I
give
would
Powell his
encourage you and your
props. I mean,
colleagues to spend some time
what the
explaining to
economy
the
has gone
American
through
people
for it to have
why that
only
is.
changed a
Final
little bit
question.
is an accomplishment.
If you went home tonight
So I'm glad that he was recognized for his
and
efforts. I think that was very honorable of Mr. Kennedy there.
Mayor Powell, your spouse, said, I got a call today from our bank, and they're debanking us. They're worried about their reputational risk because they don't like our politics. Would you think that fair?
No, I sure wouldn't. And as I mentioned earlier, I too am troubled by the quantity of these reports, and really want to understand better why this is happening. One theory is that banks are just very risk averse around BSA and money laundering, and that's because we're so tough on them, and that they just don't. Any red flag is enough. But it may be that this whole thing with reputation risk needs to be thought about. It's actually coming out of our one manual that we use. We're taking that concept out, the manual that we've been using for account access for master accounts. We're just going to take that out. But I think this needs a fresh look, and I think it's time for that, and we're gonna do that.
Well, I've asked our chairman, and he has agreed to invite some of the CEOs of some of the banks that have been debanking people. The CEOs,
Yes,
not their lawyers, not their PR consultants,
not the lobbyists.
not their priests, them, the CEOs to come in and let's talk about this and find out what the hell's been going on.
Thank you, Senator Kennedy.
Thank you, Mr. Chairman.
Senator Reed.
Thank you, Chairman Scott. Chairman Powell, welcome. Thank you very much. I think your monetary policy combined with the Biden fiscal policy over the last 4 years has made a tremendous difference. We've avoided a recession. And I'd like to remind people how far we've come. In 2020, the gross domestic product decreased 2.2%. The unemployment rate finished the year at 6.7%. By 2024, gross domestic product grew 2.5%. The unemployment rate was 4.1%. Labor force participation
Let me
rate
lock
went
myself
up
out
from
of this account,
61%
man.
to 62.5%.
Man, let me lock myself out of
And
this
that's
shit
a
right now.
combination of your work together with the fiscal policy of the Biden administration. So I thank you for that.
Lock myself out
One
of
of
this
the
shit
issues
right now
before us
because
today
I'm
is
thinking
the
about
issue of tariffs.
jumping
In
right back
July
into this.
2018 testimony, you stated, Mr. Chairman, countries that have remained open to trade, that have not erected barriers, including tariffs, have grown faster and had higher incomes. Do you still believe that?
Yes, I do. I would stand by that.
So President Trump's tariffs on China, Canada, and Mexico will obviously raise costs on families. In fact, some economists, many economists, project about $1,200 per year households will be paying extra, an increase of inflation by nearly 1%, economic growth, depression, and For example, they increased the average car price by $2,700. Is that a wise policy?
So I guess I ought to say this. I think the standard case for free trade and all that logically still makes sense. It didn't work that well when we have one very large country that doesn't really play by the rules. And in any case, it's not the Fed's job to make or comment on tariff policy. We, really, that's for elected people, and it's not for us to comment. Ours is to try to react to it in a thoughtful, sensible way and make monetary policy so that we can achieve our mandate.
Just this weekend, the president removed the board of the Kennedy Center and made himself chairman. What would you do if the president tried to remove a member of the Federal Reserve Board?
Well, it's pretty clearly not allowed under the law.
Thank you.
Yeah, I mean, that was a kind of stupid question.
We've
Trying
communicated
to push
back
the
and
narrative
forth about
that
synthetic
Trump is going to be a
mistransfer
dictator and
as
all this stuff and
potential
break the
danger
law,
to
even
the
though
banking system.
we have Congress and
Uh,
systems in place for people
and
to not be able to
could
do that
you
here.
give us some
But
insights on how we can improve financial stability by regulating
let's just
these
slip in
transactions more
propaganda as much as
appropriately?
possible.
What we've been doing for some time now is looking at them on a case-by-case basis. And if they really do transfer risk successfully, then that's okay. I mean, it's a good thing if a bank wants
The only way
wants
Trump
to
can be a
transfer risk
dictator is
off its
unless
balance sheet
Congress
in a way
allows him
that
to be.
gets compensated for and all that. But what you want to make sure is that the risk is really transferred. And that was the problem during the global financial crisis, was sort of things that appeared to but did not accomplish a transfer of risk. So we see this coming, and we've been looking at these transactions on
All
an
right,
ongoing
man.
basis.
Shit. I mean,
Well, I
this thing could
commend you
probably
for
keep
that.
going.
In
I mean,
fact,
shit, why not?
what happens
You know, we
typically
could.
is
Oh,
the
okay. We could see a rejection
transaction
at
becomes
880.
complicated
No, I mean, I
by
think we run these highs, man. We
synthetic
run these
risk
highs.
transfers, as it
We
was the
run the
case with
highs. We might get a
synthetic derivatives.
rejection,
So
but
thank
I
you
mean, if
for
they
your
find
attention to
support
that.
here, we run
We've
these
talked about
highs.
housing. It's absolutely critical everywhere across the country. We're in a housing shortage. Of course, housing is difficult. Two of the mainstays of our housing market are Fannie Mae and Freddie Mac, helping to support home ownership. Does the federal guarantee backing Fannie and Freddie help make mortgage rates more affordable and home ownership more accessible, Mr. Chairman?
I imagine it does hold down mortgage rates, the fact that they're a sovereign risk.
And how important is the 30-year mortgage to ensure that families can afford a home?
In our housing market, the 30-year mortgage is very important.
Yeah. And I have heard some discussions about eliminating Fannie Mae and Freddie Mac, which would be detrimental, I presume, to the housing market.
That's really a question for you. I mean, putting them back in the private, putting housing finance back in the private sector has some appeal over the longer run, but I leave that with you.
Thank you, Mr. Chairman, very much. Appreciate it.
Thank you, Senator Ricketts.
Well, thank you, Mr. Chairman and Ranking Member, for holding this important hearing. And thank you, Chairman Powell, for being here today to talk about our economy and all the things that are going on. I want to address, again, something that the Ranking Member started talking off about, which was characterizing the CFPB as being the cop on the beat here. But I can tell you, as having been a governor and having a Department of Banking that reported to me, that if any consumer would contact us and make a complaint about a bank, even a big bank like JP Morgan, we would investigate, as could the OCC, the FDIC, the FTC. So to characterize that nobody's out there looking for consumers, I think is inaccurate. And we ought not to try and scare consumers right now that somehow this is the case, because if you do have an issue, if you're a consumer, please reach out to your State Department of Banking, because those folks are going to look out for you. I can tell you that because I used to have one of those Department of Bankings. They did a fantastic job of looking out for the consumers. One of the things that has also impacted consumers is inflation. Prices under the Biden administration were up 20%. An average household is paying $13,000 more today than they were for the same standard of living they had before Joe Biden got elected. We see that grocery prices, for example, are up 22%, rents up 23%. Simply put, Nebraskans are economically worse off today than they were 4 years ago, and I expect that that's part of the reason why we saw this change in the administration. They thought that that was not something that they wanted to continue to pursue. They didn't want the same policies being followed. We have to end the reckless federal spending, rein in inflation, and be responsible about how we make decisions to be able to grow the economy. One of those areas that I'm concerned about is the expansion of the Fed balance sheet. The Fed's balance sheet before, at the end of 2019, so before the pandemic, was about $4.1 trillion. By May of 2020, the Fed expanded that to $7 trillion. And by 2022, the Fed's balance sheet hit an all-time record $8.9 trillion. Inflation peaked at 9.1% that year, a high we had not seen since 1981. Now, I'm encouraged by the actions the Fed has taken with quantitative tightening to shrink the balance sheet down to $6.85 trillion, but $6.85 trillion is still too high. And one of my concerns with the chairman is that that's kind of one of your tools to be able to guard against a downturn in the economy or some sort of shock. You obviously used it during the pandemic. Looking ahead long term, will the Fed Reserve continue to this course of unwinding the balance sheet?
Yes, so what we said is that we intend to slow and then stop the decline when reserve balances are somewhat above the level that we judge consistent with so-called
Yeah, I
ample
don't know
reserves.
what the hell's
The
going
most
on with this
recent
account.
data and
Seems
the
like
feel of the markets is definitely that reserves are still abundant. They're about the level they were at when runoff started because the runoff has really happened out of the overnight repo facility, reverse repo. So yes, it's an ongoing thing, and we're not yet where we're headed.
So what kind of pace can we expect? And I know that obviously there's going to be a lot of factors like what happens to the economy over the course of next year. But if things were going to go along the way they are today, you've already said the economy's doing well. Inflation's a little higher than we want it to be at 2.6%, but unemployment's at 4%. If these commissions, and I think you used the word stable quite a bit, if these conditions were to remain stable throughout the course of the year, would you have a range that you could give us of where the balance sheet might be if we were talking again here in January 2026?
We basically we're going to be looking at reserve conditions in reserve markets and trying to stop a little bit above what we consider ample. And we think we're meaningfully above that now. We can't put a number on it because you can't directly know the demand for reserves other than by observing behavior in the market and then putting a little bit of a buffer on it. So I can't give you an exact number, but for now it's ongoing and we have a ways to go.
What kind of conditions would have to happen for you to start going back to quantitative easing?
So go to quantitative easing. That's a tool we tend to use when we're at the effective lower bound and we can't cut interest rates anymore. So nothing like what you're seeing in the current day. It's a different test for stopping quantitative tightening, but we would use QE going forward only in a situation where rates are at zero, and we're a long way from zero now.
So that you think that, again, just generally speaking, then, if things were to remain stable, you'll continue to unwind the balance sheet, you'll continue the quantitative tightening. Can't give me a range on this. Is that what I hear you saying?
That's right. That's right.
Okay, great. Well, I encourage you to keep doing that because, again, I think that's important to be able to make sure that you've got powder for the next issue that we may face. So thank you very much, Mr. Chairman. Appreciate you being here.
Senator Warner.
Thank you, Mr. Chairman. Chairman Powell, good to see you. One of the things we've talked about in the past, and I've got 2 or 3 issues I want to get through fairly quickly, is that that while our regulatory framework should always promote financial innovation, that innovation can't come at the expense of things like anti-money laundering, consumer protection, financial stability. I continue to worry in many of these hearings where we keep seeing this regulatory creep outside the boundaries of traditional financial regulation. I think if we were starting a system from scratch, few of us would design it this way. But it is one of the reasons why I'm looking forward to working with Chair Scott and my colleague, Senator Lummis, on a framework at looking at stable coins in particular within the regulatory perimeter. I know my friend Bill Hagerty just introduced a bill in this area. I'm looking at trying to make sure we get those guardrails put in place and how it touches the Fed. is something that's terribly important to me. I know you and I have talked in the past about the notional idea of same activity, same regulation in the non-bank sector. If you'd like to wax briefly on this question around stable coins and how we think about them in the same point of, if they are similar to other activities, should they not have the same regulatory structure?
So we definitely support these efforts to create a regulatory framework around stablecoins. Stablecoins may have a big future with consumers and businesses. We can't know that now, but it is important for the development of stablecoins in a safe and sound manner, and a manner that protects consumers and savers and all, that there be a regulatory framework. So we see these bills, and we're in contact as we were in the last Congress, and trying to add our technical thoughts and how to do this. And we think it's a very constructive exercise.
Well, we do think, you have a lot of expertise in this session, and there are people people come with lots of opinions on everything in crypto, from over the top to the other end of the spectrum. And I'm gonna need to rely on your expertise as well as we try to work through some framework for stable coins. I know there are a lot of earlier questions on CFPB. I think the record is pretty darn good. It's returned $20 billion to consumers. Matter of fact, the last time we had the previous chair here, Chair Rohit, Mr. Chopra, we were talking about $55 million to Virginians. I do have to mention this more for my colleagues. Tim Kaine and I did a teletown hall last night. Lots of things happening in Virginia. Normally we would get maybe 3,000, 5,000, 6,000 folks on a teletown hall. We had 60,000 last night. I have not seen anything like that in my time up on here on the Hill, and a huge amount of concern about what the Doge boys are doing, whether our information is safe, whether privacy is protected. I had one lady say, in light of what was happening at CFPB, and while there's not a direct connection, she's saying, is her deposits at her bank safe? We tried to give her a assurance, but I said,
Look at him lying.
you know what, ma'am,
Look
I'm
at
going
him
to be
lying.
talking to the
What?
chairman of the Federal Reserve tomorrow. And with this,
Why they always use old little
diminution
ladies
or
in all their
shuttering,
little
at
sob
least at the
stories?
time being, of the CFPB.
We get it. We love them.
Can I tell,
My
her name
God.
was
dude.
Mary, can I tell Mary from Virginia that her bank account is safe?
I think
Oh,
bank accounts
little
overall across
vulnerable
the economy are
ladies.
safe. Yes, we've still got deposit insurance at the FDIC, and the banking system is well capitalized and safe.
Well, again, I think the concern was being raised was that the diminution of consumer protections lent her concerns about whether that dollar being safe. Last thing I want to recognize is that, there's been reports in the media about the thinness in the treasury markets, the number of additional bonding that we're going to have to do, particularly if with so many of these unpaid tax cuts. Matter of fact, one of the things that was really striking to me was that yesterday the president mentioned how he was, quote, examining treasury debt payments for possible fraud, and suggested that our debt might not be as high as possible.
Yes, Carlos,
we
this
all
is a
understand the full faith and
Nasdaq
credit of the
chart.
United
Thank you.
States is based upon
Not
a reputation.
micros.
If this president were to suddenly say, I'm wiping off X amount of debt because I don't believe we owe it, what kind of effect would that have on both stability of the dollar and the overstability of our economy?
It will probably not surprise you that I will
Not
defer to
answer
you
that
on
question.
that question.
Do you think it would be, from a Fed standpoint?
This man is not
going to
answer no questions about Trump.
Not going to pay our
His
treasury
re-election is
debt.
next year.
You're going to have no
He ain't
view at
gonna say
all.
shit about Trump.
I'm not going to comment on things that the president says.
I would like to see us at some point get a stronger answer on that, because I think that in light of the president's willingness to shut down agencies willy-nilly, his ability to potentially curtail payment of debt, I think would have devastating consequences on our economy. Thank you, Mr. Chairman.
Senator Britt.
Thank you, Mr. Chairman. Obviously, there's been a lot of conversation both in and out of this hearing room
He doesn't
today.
believe what he's saying.
Conversations
Isn't his
about
body
the
language? I mean,
co-president,
it's crazy
referencing
how
Elon Musk, referencing the work
they
that
have their
Doge is
marching
doing.
orders
I think it's important to remember
They're
that
saying these
President
things,
Trump
but
ran
their
all
body
this.
is like,
He
dude,
said we're going to look
you're
for
lying.
wasteful
Why are you
spending
saying these
across
things? You
our
don't believe
government.
what you're
We're
saying. Why are you
$36
saying it?
trillion in debt, y'all. That's not only fiscally irresponsible, it is actually morally irresponsible. And the difference in this administration and the last administration is that President Trump is actually the final arbiter. And it's interesting that none of you had anything to say over the last 4 years when it is clear that our commander-in-chief was not in command. And if we're going to use the term co-president, then let's go back and say co-president Jake Sullivan, co-president Ron Klain, co-president Jill Biden. I mean, it seems that some of the biggest decisions
Jill
were
Biden
made
was
during the
literally
president's
sitting
afternoon nap time.
at the
And so I
president's
just
desk.
think
You can't sit
we
here
need
and
to be
say
a
that
little
she
bit more
wasn't no
honest
quote
about what's been
unquote
laid
shadow
out and
government
what's actually
passing laws
occurred.
herself
Chair
when
Powell,
she was literally behind the desk.
I want to discuss some monetary policy issues, but I first want to highlight a few supervisory items. We unfortunately started 2023 with several bank failures in which the
So, I
Fed
mean, this
itself
trend line right
admits
here
its
is, I ain't gonna
supervisors
lie,
were,
it's kind of
quote,
concerning, but
too slow to
I
ask.
think,
The question
I
has
think we're
been
gonna probably
asked
shoot
earlier
past. I think we're
about
gonna
who was fired, who
close
was
back
not.
above this
I think
upward
that
trend line. I think we
there's
will.
some real
At least that's what I'm betting on
merit
right here.
to having accountability that
Or
we
we
have
just
not
see a
seen there.
rejection and
In the
my
aftermath of
feelings
those
get hurt.
failures, the Fed was certainly not slow to act when it came to new regulations, like the new capital requirements that would have put the U.S. banks at a global disadvantage and actually hurt consumers in my state. The way I look at this is the world came up with a gold standard. And then Vice Chair Barr said, hold my beer. And unfortunately, that hurts Alabamians. In addition to that, we had Community Reinvestment Act and stress testing frameworks that were basically adopted in secret. Or as we discussed last week, the reputational risk and just the arbitrary nature of that and those standards that were used to push political agendas. None of this is acceptable, and we've got to take a look at how to promote greater accountability and transparency into the Fed's supervisory function. Shifting gears, as of January 30th, the Federal Reserve had a mark-to-market loss on its balance sheet of roughly $221 billion. In fact, I looked back and the Fed has posted losses since September of 2022. Meanwhile, we've seen transfers to the CFPB totaling $2 billion since September of 2022. So just to clarify, Chair Powell, these money transfers are requested
I was just thinking about that,
by the
Meadowmine.
CFP director.
It's crazy how, you know, the highest levels of government are now trying to adopt the language of the quote
Is that
unquote
how that works?
peasants, the common folk.
So the director of the CFPB requests money.
I
and
find that
we,
very
under law,
interesting. I was
we
just thinking
send
the
that
same
money.
thing, but
Yes.
I didn't think I was
So,
going
and
to
yeah,
say
in
anything
fact,
about it.
But Dodd-Frank actually prohibits the Fed from actually reviewing or amending those requests.
That is correct.
And so it gives full discretion to the CFPB
Up to,
director.
I think, 12% of our, there's a ceiling on that, but that's correct.
So just to level set, how many times, has the CFPB funding
And
request
if this drops
been
here, this is going to
denied
probably
by the
hurt.
Fed?
We don't have
If
the
this
authority
drops,
to
it's
deny
going
it
to
under
probably
law.
hurt.
Zero, right?
But
Zero, yeah.
we
Yeah,
could
that's
see a
what I
bounce.
thought. And
I'm
by
hoping.
the way, I'd like to applaud the current administration and acting director vote for inserting some accountability back into the agency by pausing these quarterly just blank.
All right, so the Bulls are buying it
checks.
up. Okay, that's all I
On
wanted
that,
to
I know
see.
there's
The
been a
Bulls
lot
buy
of
it back up.
conversation around the Bureau over the last few days.
Because I don't think,
but I
I
do want
mean,
to
yeah,
focus
we
on
did
this
hit
last
this
couple of years,
resistance
particularly
line,
the $2 billion the
but
CFPB
I mean, everybody's short
received
right
from
now.
September 2022
And I tend
up
to
to the
naturally
last
try to
receipt
fade
on
everybody
January
else.
2nd, 2025.
But I mean, the shorts could
Congress
work, but
specified in statute that the
I mean,
Fed
everybody
shall
can't be on
fund
the
the
same side of the
CFPB
market.
through the combined earnings of the Federal Reserve System. However, as I mentioned, the Fed has no current earnings. It has a balance sheet of negative 200 billion. So instead of the recent audit statement saying the Fed is funding the CFPB through assessments on its reserve banks, Mr. Chair, there are only two statutes that authorize the Fed to make reserve bank assessments, and neither permit the CFPB to fund transfers. So what authority exactly did the Federal Reserve have to assess the reserve banks in this manner over the last 2 years? I just wanted kind of a fact finding.
We looked at that question very carefully, and it's very clear on the law and the legislative history that we're still required to make those payments to do so.
Appreciate it. Thank you.
Senator Van Hollen.
Thank you, Mr. Chairman. I would point out that candidate Trump did not run on implementing Project 2025. In fact, when he was asked on the campaign trail about Project 2025, he said, I don't know anything about that. Who are those people? And yet he early on and quickly installed a key architect of Project 2025, Russ Vought, as the head of the Office of Management and Budget, which we know is the command and control center for the budget
Project
overseeing all federal
3036.
agencies.
They should make a movie.
And that's what Elon Musk is doing now. He's
A horror movie.
implementing Project 2025, the same Project 2025 that candidate Trump said he knew nothing about. And he said that because he knew it was unpopular. He knew it would be unpopular to take the financial cop off the beat. And I want to start by talking about what's happening over at CFPB, the Consumer Financial Protection Bureau.
That's going to become a
that
meme.
is the cop
Oh
on
my
the beat
God.
to
The
go
cop off
after
the beat.
fraudsters and scammers who cheat Americans out of their
Oh,
hard-earned
that's
money.
so funny.
And they have returned billions of dollars to our constituents, to the consumers who have been victims of these scams. And in doing so, they've earned some powerful enemies who want to shut them down. And Elon Musk is doing that dirty work on behalf of those fraudsters. And there's something especially twisted about the richest man in the world shutting down an agency that helps victims of scammers and fraudsters recover just a little bit of their hard-earned money. And I find it especially interesting that the new self-declared head of the CFPB, Russell Vought, told employees not to come into the office and essentially to stop work. Here's what he wrote, and I'm quoting, "Employees should not come into the office," unquote, and stand down from performing any work task, unquote. So this is an interesting situation. Federal employees continue to get paid, but the Trump administration tells them to stop doing their work. That apparently is what the Trump administration thinks is a good deal for the American taxpayer, to pay employees to not to do their job. So, Mr. Chairman, I have a simple question for you. Is that a practice that you pursue at the Fed, to pay your employees but tell them not to come to work? Have you done that?
No.
That wouldn't be very efficient, would it?
No.
I know,
No, it
right?
wouldn't.
This is supposed to
yet
be a meeting
that's what
about
the
him,
so-called
the economy,
Doge
stuff like
boys,
that.
efficiency
We heard
boys
more
are
about
doing.
Trump and Elon
In
more than
addition to that,
anybody
they're
in this meeting. What's up?
rummaging through the private,
Yeah,
very
you know.
personal, sensitive information of Americans at the Department of Treasury. So it seems to me that the Trump administration and Elon Musk are
Shit, if you was
focused
playing a shot game,
on everything
you'll be
except
completely
what
drunk right now.
Donald Trump said he was going to focus on during the campaign, which was to bring prices down. And when you look at the price of eggs these days, I noticed that Waffle House just instituted a new 50-cent per egg surcharge due to the nationwide rise in the cost of eggs. They said that's going to be a new surcharge, and other restaurants are following suit. You've seen that, right, Mr. Chairman?
Yes.
And at the same time, the Trump administration has restricted federal agencies from providing the public with information about the bird flu, avian flu, which is part of the cost of egg increases. So what we're really facing here is an administration that
I stopped eating chicken a long time ago.
campaigned on bringing down prices and is not doing that, did not campaign on Project 2025, and that's what they're doing. But when it comes to prices, Mr. Chairman, the president's also talking about significant increases in tariffs.
Let me keep my eyes on this level right here.
Colleagues are also talking
The
about
Bears may try to come back
passing
in and
a
really just
tax
pile into this
bill
level
that
right here.
gives weight
I mean, we got this
disproportionately to the super
line
wealthy,
right here. We got
and
this
which will
level
add
right here.
trillions to the
The Bears
deficit
could try to pile into
by
this,
their
so I'm
own
gonna just
account.
keep an eye on that.
They're talking about playing around with the baseline. So my question to you is simple. All things being equal, do big increases in tariffs and increasing the
Oh, there we
deficit
go.
and debt
There goes the Bears.
put upward pressure on inflation? Isn't that simple math?
You know, it really does remain to be seen what tariff policies will be implemented, and I just think it would be unwise to speculate when we really don't know. I mean, we see proposals, but it's so hard to say what's going to happen. And
Well, last time the Trump administration was in office, the Fed took actions because they were concerned about the impact of increasing tariffs.
I'm not gonna let.
Isn't that the case?
we wound up cutting rates in 2000 and I guess it was 19,
Right.
but it really was because growth slowed and confidence was weak and the global economy was weakening. So the net effect of all that's what we look at. And it's really not just tariffs. It's tariffs, immigration, fiscal policy, and regulatory policy. And those will all go into a mix, and we'll try to make sense of it and do what's right for monetary
Well,
policy.
if you could just get back to me, I'm not on the question of increasing the deficit by trillions of dollars and what impact you believe that has on inflation and prices. Thank you, Mr. Chairman.
Yes, sir. Senator Lummis.
Thank you, Mr. Chairman, and thanks, Chairman Powell, for being with us today. I think you're aware of what direction my questions will take. They will be focused on the bank supervision function of the Fed. And I'd point out that when you and I were toddlers, 1956, the chairman of the Fed at the time, William McChesney Martin, said that the Federal Reserve Board is an agency of the Congress. Ben Bernanke said something similar in 2013 when he told Janet Yellen that, quote, Congress is our boss. Do you agree with that statement?
He doesn't
Yes,
have
the
to
way I
agree.
always say it is that
He doesn't have to.
our supervision,
Regardless if
our
he likes it or
accountability
not,
runs
Congress is.
through the
Or not
legislative branch,
the
not
Fed's
through the
boss,
executive
but
branch, as it
they're the
does in
one
many
that
other forms of government.
holds the real power
Thank you
here
for
in the
that,
United States.
because I wouldn't have guessed that that was going to be your response. The way that the Fed has behaved for the last 4 years in its relationship with the U.S. Congress is to thumb its nose at Congress. Your staff has repeatedly stymied information requests from this committee, notably made by myself, the chairman, the ranking member, Senator Tillis, former Senator Pat Toomey, and others. In my experience, the Fed is a black hole. It consumes information, but it never releases it. Your fellow governors have personally misled me on at least 2 occasions with respect to Wyoming and digital assets. And in recent federal court filings, former Senator Pat Toomey has accused your staff of lying to him while providing technical assistance on legislation that passed in the National Defense Authorization Act in 2022. Now, I have behind me a statement by the Fed's General Counsel, one of the staff that's sitting behind you today, who said, quote, the Fed generally resists legislative prescriptions.
Hold on, what the hell just happened?
Now, to me, that's thumbing his nose at Congress, the very
I was like, what
people
the?
that you and I just agreed you are responsible to and the people depend on. So this is why the American people think there's a deep state. This is why they think there are faceless bureaucrats making policy to hurt the very people of this country. Just look at the mess the Fed made of Silicon Valley Bank. And I contend that there is a lack of understanding that is deliberate on the part of the Fed with respect to digital asset policy. So the Constitution says Congress is your boss, but somehow your staff have not gotten that message. So, Chairman Powell, do you commit on behalf of yourself and the Federal Reserve staff to comply fully with all document demands issued by this committee in a timely manner.
Sure.
Will you instruct your staff to be complete in their responses
Sure.
and not to obstruct the oversight functions of this committee?
Sure.
We always work with the committee to be responsive to your requests. Sometimes they're beyond our capacity to respond to, and we work with committee and with committee staff to do that, but we're always responsive to committee requests.
And I'll look forward to engaging with you when you feel that our requests are outside of the scope of the oversight that we have over the Fed. Do you commit to disciplining or removing any staff that are found to have engaged in debanking activity, furthering Operation Choke Point 2.0, or other misconduct?
Sure.
I can't make an open-ended commitment to remove anybody, but I will tell you that I am struck, and my colleagues and I are struck by the growing number of cases of what appears to be debanking, and we're determined to take a fresh look at that. In fact, I took the thing that you showed during the debanking hearing. When I saw that, we're now taking that out of the manual. So I thank you for that.
Thank you, Mr. Chairman. My time's up.
Senator Smith.
Thank you, Mr. Chair and Ranking Member, and thank you, Chair Powell, for being with us today. I appreciate your presence here. I'd like to start with the issue of the rising cost of home ownership, something that I know is of great interest to many of my colleagues on this committee. I know, Mr. Chair, that you care a lot about home ownership and making home ownership accessible and available to folks. My colleague, Senator Lummis, as well, many of the folks on my side of the aisle as well. And so I think this is something that we can agree on, that the rising cost of home ownership is a big challenge for our constituents, for Americans. And one of the big pressures, there are many, but one of the big pressures is the rising cost of home insurance. In Minnesota, families, seniors are struggling
No, I gotta
to
leave it where
manage
it's at off
a nearly
principle.
40% increase in home insurance rates. We've seen this over the last 7 years or so. And I know, Chair Powell, that you've told this committee in the past that rising cost of buying insurance for your home has been a source of inflation as we've been trying to manage inflation. Now, I don't know anyone who doesn't see this crisis of rising insurance rates as being caused by extreme weather events. We've seen massive flooding in southeastern United States. We've seen flooding in Minnesota. We've seen fires in the Mountain West in California. I mean, these are climate-related
Have somebody fix that weather machine y'all
events.
got.
Then that's not a political position. That is just a fact. So, we've got banks that of course, require, understandably, that a homeowner provide insurance as a predicate for getting a mortgage. So there's a big question about what's going to happen when insurance becomes unaffordable, or in some parts of the country, just literally not available, and what impact that would have on the mortgage markets, on the value of American homes. Just last week, a new analysis from First Street showed that overall, the value of U.S. real estate could be reduced by $1.4 trillion, colleagues, over the next 30 years due to unaccounted for climate risk. That's the cost, the risk of not being able to afford home insurance because of these extreme weather events. And the prospect of trillions of dollars of property become uninsurable is clearly a recipe, it seems to me, for market instability, both in the rental as well as the mortgage market. So my question, Chair Powell, is, given these trends, how do you think the Fed and how do you think we should be thinking about the challenges that these events are going to pose to insurance markets and to the overall financial stability of the economy? I'm asking you to comment specifically on climate change, because I understand my colleagues on the other side of the aisle see that as a political question. It's more like what you see as the risk to financial stability here.
So let me quickly note that we don't regulate or supervise insurance companies for the most part, but we're seeing the same thing, which is both banks and insurance companies are pulling out of areas, coastal areas and things like that, or areas where there are a lot of fires. So what that is going to mean is that, if you fast forward 10 or 15 years, there are going to be regions of the country where you can't get a mortgage. There won't be ATMs. There won't, the banks won't have branches and things like that.
Right.
That's a possibility coming up down the road. It's not that the banks will stay there and keep making loans in the face of evidence of disaster, or that insurance companies will do right policies. They can cancel those policies every year.
Right.
So I think the risk is that they just won't be there and that people won't be able to get them. That's really the issue.
And it seems to me that that would be a massive source of instability in our economy overall. If you were to see that kind of dramatic decline in home ownership, home values, not to mention the disruption that would occur if people literally couldn't be in their homes anymore.
So I think it's going to fall, if that happens, it'll fall on homeowners and
Right.
residents, but it'll also fall on state and local governments, which you see happening now, where they're stepping in states where insurance is going away, private insurance. You're seeing states step in because they want those areas to remain prosperous. So I don't know that it's a financial stability issue, but it certainly will have significant economic consequences.
Well, certainly to try to figure out how to provide reinsurance, as an example, in the places where commercial insurance isn't available, would be a massive impact on state budgets, if to follow your chain of thinking. And I know in this committee, I've heard some of my colleagues on both sides of the aisle talk about the challenges overall with flood insurance, just as an example, and the massive expense that would have for us as well. I raise this, colleagues, because I think that this is an important issue that we need to be paying attention to. I do think it has a fundamental impact on the overall health of our economy as we look not even down the road, but where we are right now. So I'm out of time. Thank you, Chair Powell. I have a question. You and I have talked quite frequently about my deep and keen interest in the Community Reinvestment Act, and I'll follow up with a question on that for the record.
Thank you. Thank you, Senator Smith. Senator Haggerty?
Thank you, Chairman Scott. Chairman Powell, it's good to see you here today. Welcome. I want to start by talking to you a bit about markets and inflation. Less than 6 months ago, you expressed some serious concerns about labor market weakness and the risk of persistent inflation. But since then, the FOMC has begun its easing cycle and cut its target rate by 100 basis points, as you mentioned in your opening remarks. Now, in the January meeting, the FOMC has telegraphed that it felt both the labor market and inflation have reached a point where you're comfortable maintaining its target range. And my question is this: the recent market data, including last week's strong jobs report, indicate that the economy is on firm ground. Indeed, swaps markets have begun to price in fewer and fewer cuts this year. And I just wanted to talk broadly about these market conditions that you see. Do you see evidence of a higher neutral rate emerging at this point?
Yes, I mean, let me say there was a lot of reason to be concerned about downside risk in the labor market toward the middle of this year, but really that concern has diminished significantly. Labor market's very strong. I think the evidence is, my own view, and there are many different views on this, but is that the neutral rate will have risen meaningfully. Very hard to be precise about it from what it was. It was clearly very, very low before the pandemic. Extraordinarily low, historically so, but yes, I think it's moved up, and many of my colleagues on the FOMC feel that way too.
It certainly seems that way. I'd like to turn now to what seems to be a very popular topic right at this point, and that's the CFPB. In your response to Senator Britt's question earlier, you confirmed that when the CFPB submits quarterly funding requests, the Fed is not in a position to exercise any discretion over what the funds are used for. Is that correct?
As long as it's compliant with the law.
It just strikes me that the Fed is not in a position to hold the CFPB accountable for what it does or how it spends its money. Congress hasn't been allowed to hold the CFPB accountable for what it does or how it spends its money. It looks like no one has been able to hold the CFPB accountable at all. And now I hear, complaints coming from every corner, particularly from the other side, complaints about the excessive delegation of authority to a Republican CFPB director when this entity was intentionally created to be wholly unresponsive to elected officials. So I just find that quite rich. Before I close, I'd like to come to a point on climate, and particularly the Fed's forays into climate activism.
Yeah, I'll probably have to close this one for a loss if it just keeps
the recent retrenchment
trending
that
down.
we've seen. It's one thing for the Fed
So I
to
have to close this one for a
disassociate from its
loss.
past climate activism in a press release, but to credibly claim that it's divorced itself from partisan climate policies, the Fed needs to do more than just issue statements. It needs to actually end its climate policies. The Fed's independence from politics is a headline topic at the moment, of course.
Yeah.
And while much attention has been given to potential external pressures on the Fed, I think it's also critical that we scrutinize how the Fed's own regulation and supervision might be utilized to in some way politicize the institution. So when the central bank strays from its mandate by embracing partisan climate policies, the Fed embroils itself in controversial political debates and invites legitimate political scrutiny. So I just want to urge the Fed to refocus entirely on its core statutory mandates. I know it's a commitment that both you and I share, Mr. Chairman. Thank you for being here with us today.
Thank you.
Thank you.
Thank you.
Senator Warnock. Thank you very much, Chairman Scott, and welcome again, Chairman Powell. I want to echo the words of Ranking Member Warren and so many of my colleagues today on Doge and Project 2025's illegal attack on the Consumer Financial Protection Bureau. Certainly the Bureau was not created to be dismantled. And since its inception, the CFPB has been the only federal agency solely dedicated to protecting Americans' wallets and pocketbooks from scammers and predatory companies in financial services. The CFPB reduced costs for Americans,
honestly, I wouldn't even know.
returning more than $21 billion to Americans who have been cheated since its inception. I want us to focus on that as folks are talking about chasing after waste and fraud and abuse. The CFPB has returned more than $21 billion to Americans. Make no mistake, this attack on the CFPB will increase costs for Americans, and it will give the green light to fraudsters and predatory actors seeking to cheat hardworking Americans. And so, Chairman Powell, thousands of Georgians of all
I know
political
Powell was
stripes have
just sitting
written
there
into my
thinking, like,
office,
what the hell does all
and
this
they
got to
are
do with me?
alarmed by an unelected billionaire and his hacksters' dangerous attempts to access Americans'
Hacksters.
private data and the Treasury Department's systems that control $6 trillion in annual payments to millions of American citizens, including Social Security, Medicare, and tax refunds. Quickly, yes or no, has Elon Musk or members of his team, to your knowledge, attempted to access the Fed's protected data and systems? Yes
No,
or no?
I don't
To your
believe so.
knowledge.
I don't believe so.
Okay, so will you commit to report to this committee, majority and minority, immediately should you become aware of any such attempt by Elon Musk or Doge to pierce the Fed's independence or to access its protected systems?
Yes.
Thank you for that commitment. The Fed's latest monetary policy report states that the tight labor market has allowed employment and earnings gaps between Black and Hispanic Americans and white Americans to narrow. I was glad to see that many of the long-standing disparities in employment and wages by sex, race, ethnicity, and education have narrowed under the Biden administration. Some gaps have reached historic lows. Specifically, the employment gap for Black workers and white workers is near its lowest point in almost 50 years. That is the economy that the Trump administration is inheriting, a historic low in almost 50 years. Chair Powell, as you work to promote maximum employment, what steps will the Fed take to ensure that these equity gains are permanent?
So the best thing we can do is it's both of our mandates really, because as you well know, high inflation hits people at the low end of the income spectrum first and most. And in addition to that, we know that the benefits of a strong labor market over time can be really visible and important in those communities as well. So we pursue our mandate, we keep our heads down, and it works out that is the single best thing we can do to foster, closing those gaps.
You pursue your mandate, you want to make sure that it's working. Would you agree that we still need good equity data to continue to narrow and close those gaps by race and gender?
I do think, we're always going to be in favor of good data at the Fed, and we do have quite a bit of that data on our website.
But if we don't have equity data, it'd be difficult to know, right?
Yes.
I'm glad to hear you still believe in the value of good equity data for economic
Data.
policy making. It's better
Data.
to fly with the data
All right.
than to fly blind. I'm not sure what's so controversial about the data. And while I was disappointed to hear that the Federal Reserve, which is independent from the White House, it scrubbed a diversity and inclusion section from its website after President Trump's executive order, while also scrubbing data on the racial, ethnic, and gender makeup of its economists and researchers, I hope you will continue to ensure that the public has good data on how our economy is working or not working for historically marginalized Americans. I also hope you will reconsider your decisions around the whitewashing of the Fed's website. Chair Powell, as we think about the value of protecting data on the black-white wealth gap or employment gap, I think it's
All right, guys.
important to understand what
I'll run this for
policymakers
3
can
more
learn
minutes, and
from
then I'm
this
gonna have
data.
to leave at
Historically,
10:40.
from what you've seen in the data historically, what types of economic events have caused the black-white wealth gap or employment gap to widen?
Well, high inflation, downturns. You see, generally, just take the black unemployment rate. It generally moves at twice the speed of the white unemployment rate. So when it goes up faster, and when it comes down faster. But there is, at the end of the day, there's always been a gap, and we want to run a strong labor market, and we target overall overall labor market conditions for maximum employment. But one of the benefits of that is that gap comes down.
Thank you so much. We all know that fully deregulating our financial regulators like the CFPB, firing bank examiners at the FDIC, or weakening the Fed's supervisory capacity makes an economic shock or recession more likely. We know that this disproportionately impacts Black and Hispanic workers, and there are real consequences to weakening and eliminating financial regulations that keep us safe. Working people are the ones especially who suffer. So thank you so much, and I look forward to continuing to work with you to close these gaps. Senator Banks is next.
Thank you, Mr. Chairman. Chair
All right,
Powell,
guys.
thank you for presenting your report to the committee today and for coming to meet with me last week in my office as well. The Federal Reserve has enormous power over Americans' ability to work and earn a living. And the Fed's interest rate decisions have an especially big impact on industries like manufacturing, which depend on big investments. Chair Powell, the Fed's data on manufacturing is still holding up nationally, but it doesn't look very good in the Chicago region, which includes most of my state in Indiana. The Beige Book says manufacturing jobs are declining and fewer people are buying manufactured products. It also says that steel demand is at a low level, auto production has slowed, and machinery orders are down. What does that say about the rest of the country? When manufacturing in the heartland slows, does that signal trouble for industries in other parts of the country?
It can. It doesn't always, but it certainly can. We watch the manufacturing sector. It's very important. Manufacturing jobs tend to be high productivity jobs. They're very important in our economy. But I would say over the last couple of years, manufacturing was pretty weak during years in which we had high GDP overall. Manufacturing is a smaller proportion of the economy than it used to be, but it's still extremely important.
Senator Reid asked you why free trade doesn't
All right,
work
guys.
when one of the
I
giant players.
gotta leave. We'll definitely come back this evening. We'll see what happens, and we will prepare the best that we can for CPI that's going to be released at 7:30 tomorrow morning Central Time. So that's what we're going to be talking about tonight. And with that said, have a good day, everybody. Peace out.